Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets. It's Thursday, the 28th of April, and a big day for Argo Blockchain shareholders in the sense, well, at least on the charting basis, that after 7 months, it looks like we're breaking a downtrend line there in place in September. We've also broken back above the 50-day line, but the more important thing there is the 7-month trend line there at 69 pence. End of day close or a weekly close above that, and we could be heading up to the top of that rising trend channel from January, that resistance line projection as high as 90 pence, ideally by the end of next month. The other thing to note here is we've got a bullish divergence line here, so that's been tested. This is the third bounce off that. Third bounce is normally the best bounce, so that tends to bring the big move if there is going to be a big move. So that is looking encouraging too, over and above the fact that it is a bullish divergence line showing that the trend has started to change. Next up is a stock which rather pleasingly overshot the runway in terms of the target by quite a mile. We were looking for shares of Atome Energy to hit the top of that rising trend channel from February up to 115, that sort of area, maybe up to 120. But we managed to blast through that yesterday, and we can now upgrade the potential upside here. That would be the top of the wider channel there from back in January, heading for £1.70, perhaps as soon as the end of next month, especially at the current rate of progress. The other point to note here, the rally started off, as I said, I think the last time I looked at it, with the bullish divergence line, so we had that bear trap and a higher RSI at the end of February. And the other good point to note is the way that we've got both the 50 and 200-day moving averages rising, probably about a week away or less from a cross, and that would be a golden cross, and traditionally the run-up to the golden cross is at the strongest part in the cycle, and we're already seeing that with the price action at the moment. So basically above 115, if we're lucky 120, looking for 170 by the end of next month on Atome. Moving on to Cloudbreak, which had a rather sharp retracement from the best levels that it achieved in February and March. What's interesting here is it looks as though we've broken that resistance line there from the end of February. Call that around 5.25 pence. Longer we stay above 5.25, the greater the chance of at least an initial move up to the rising 50-day moving average at 7 pence. And rising 50-day lines in this sort of configuration tend to be a magnet for the share price. Final point to note there is we've had the second dip on that bullish divergence line, the one that's been in place since October, so that might continue to provide a momentum for the stock. Only back well below 5 pence really at this stage. 4.8, 4.7, something like that, really delaying the upside scenario. If you're fussy, you'd want to see the shares back above that March low there, but around the 5.2 pence area. But looks like we're just peaking out or peaking through that resistance line and heading higher on Cloudbreak. On to a stock which has had a rather difficult given us a rather difficult charting challenge. We already have seen the shares gap down previously with Chill Brands back in September, then in November, and most recently in March. And obviously the placing that we've had, or the news that we've had regarding fundraise pushed the share price even lower. Difficult to work out exactly the trajectory here, but it looks as though we've got a support line there from March, and that's versus yesterday's low at 2.5 pence. Above that, we could potentially start to fill that gap up towards the 4.8 to 5 pence area, even if the shares then come back down again after that. If you're fussy, maybe wait for an end-of-day close above yesterday's high at 3.25, so we're just shy of that at the moment, or the previous low there at 3.8, but just looks as though that support line there from March will hold the shares just for now. The other final point to note is the way that we've been very oversold after that dip, and that might provide a positive reaction. But I think probably intraday, just looking for a break, a lasting break of 3.25 yesterday's high is the thing to do ahead of a move towards 5 pence as a best case scenario. Moving along to a situation which is rather less complicated, Galileo Resources. Here, after a long time, it looks like the shares are finally getting their act together. Good support, multi-day support above the 200-day moving average. That's the black line there at 1.1 pence. We already had a sideways shuffle above the 50-day moving average, which is rising, and that's a positive. And then we've also got this uptrend line in the RSI window from December, which is holding around the neutral 50 level. Looking for 1.4, we've been looking for 1.4 for quite some time, and a break or an end of day close above that could open up the door to 2 pence over the next 1 to 2 months. So looking pretty set fair after an extended consolidation there for the best part of a year on Galileo. Another stock which is in focus at the moment, just off the back of the latest price action, so a gap to the upside today for Jersey. Looks as though we're in a rising trend channel from back in December, top of the channel heading for 280. Maybe that's a 1 to 2 month time frame target, but if we can hold that the top of that gap there at 181, we should speed along to at least retest £2.20, which is March-April resistance, ahead of the 280 best case scenario target. On to Kavango, which gets reasonable airplay here on the bulletin board, heroes. Here we've got this falling wedge break, and in fact we had a full storm, so we had an extra low there, but hopefully a second or third time lucky here with a break of that trend line there from March. That's around the 2.7 pence level, so longer we're above 2.7, and with this bullish divergence line as well, the greater the chance of a move towards that March resistance line there at 4 pence by way of the 50-day line at 3.4. I mean, even 3.4 would be welcome from current levels, but it's just interesting that we had that low there in March, and then we had 3 bear trap lows afterwards. So it looks as though the share's just finally gouging out the last of the sellers ahead of what will hopefully be a decent turnaround. Stock which is not normally the type we have here, but Mothercare is interesting that we've got this bullish divergence line, and we've also had a gap higher off the lows today, breaking that line of resistance from April at 8.5 pence. Above that, we're looking for 10.8 or 10.9 pence over the next 2 or 3 weeks. But the momentum from the bullish divergence line should be enough to get us at least up to that channel, 10 pence or so over the next or over the near term. Stock which drew attention to itself earlier in the month is Simek, with the unfilled gap to the upside there at the beginning of the month. Interesting now that we've got had a gap down yesterday and then a gap higher today. That soul or lonely candle there, called an abandoned baby in candlestick jargon. Very bullish sign. It's like a handbrake turn really for the price action. So above the bottom of the gap there at 2.3 pence, we're looking for the top of that broadening triangle from October as high as 4.5 pence over the next month or so, hopefully a bit sooner. A stop loss obviously back below 2 pence, but ideally we stay above 2.3 and keep that abandoned baby formation. One of the strong silent types which has been rising of late is Southern Energy. Here we've got this rising trend channel, very strong price action since the gap higher at the end of March, and really the pattern there is of the shares finding new support at old resistance all the way up, which is seen in the strongest of situations. We're looking for as high as 70 pence over the next 6 to 8 weeks here, so hopefully the slow grind higher will continue for Southern Energy. Finishing off with Woodbois, which had a flurry of activity earlier in the week, and this looks not like now a perfect bull flag situation and a mid-move consolidation. The other plus point is that, like one of the stocks I've discussed just in this earlier in this recording, we've got the 50 and 200-day moving averages rising. They're in the run-up to a golden cross, and that tends to be the strongest part of the cycle. So that should mean that a break of the initial resistance this week at 6.14 pence will give us 9 pence pretty quickly, hopefully in the next week or two. So that's we'll see if the charting works there, because it does look like a very interesting and a very strong setup on Woodbois. That's it for me today. More updates tomorrow.